Hi friends, Simit here from informedtrades.com. On the screen right now, you're seeing a chart of crude oil, WTI crude. In late September, we had noted this consolidation pattern, a series of tight candles, as well as price crossing above the 50 simple moving average, and how that signaled a potential bottom. Since then, the market has rallied, so that's been interesting and definitely good for those who are long crudes, such as myself. However, right now, I think we are due a bit for a pullback, perhaps to 47.74, which is a resistance level that is now support. Also, for those who are interested in crude, something that they also should be monitoring is the U.S. dollar. Here's the dollar index, the futures dollar index. It's been trending down, and now we are below the 50 simple moving average. That looks to be continuing. It's a little more interesting on the FXCM dollar index, where we are approaching a bottom trend line, right? So this is the difference between the FXCM dollar index, which we're currently looking at, and the futures dollar index here, is that the FXCM dollar index is a bit more equally weighted to other currencies. The futures dollar index is more biased, or largely a reflection of the euro. So here we are. U.S. dollar has definitely been declining over the past 4 trading days. It really has bounced right off resistance here, off this upper trend line, and this bottom trend line has been holding pretty well, which we're now approaching. So let's see if the dollar rallies upon hitting this trend line. If it does, then we may see crude oil fall back to 47.74. In terms of a trade setup here, you could go long 47.74 and target 53.45. You could put your stop at around 43, right around here, 43.20, something like that. That's not a great setup, but the reward risk will be a little better than 1-to-1. So definitely not a great setup, but it is an opportunity. If we fall back to 44.73 or even further, I'm not adding to my existing position now, but I'm definitely keeping an eye out for a bigger fall. If we get into the 30s, especially. Zoom out to the weekly chart. Oh, I think we need to go back out further to the monthly chart. Yeah, if we get back down to here, no, not that low, here. I can actually delete this trend line. If we get back down to here, the lows that we saw in 2009, 39 or even lower, if we can get down to 33, it might be a good place to have a stink bid, what's called. If the market just spikes down there, you'll get filled. We may get a one-time spike or a quick spike down to the low 30s in the event of some type of big crash. If that occurs, I'll definitely be looking to add my oil position. But if you don't have a position on yet, or you're interested in a short-term trade, waiting for a pullback to 47.70 could be an opportunity. It won't be a great setup, but it is something if you like those odds. As I mentioned, though, keep an eye on the dollar, because if the dollar continues to fall, then we may have much more room to run in the crude oil, which I think is a distinct possibility. The dollar looks a bit bearish to me now. Of course, in the short term, we may find support here in a rally, which in turn will give us an opportunity to potentially buy on the dip in crude as well. So that's sort of the way I'm seeing the crude dollar and that relationship. Any questions you have, anything you want to add, join us at informedtrades.com. Best of luck in your trading and investing. We'll see you next time. Take care.